Now, as we edge closer to the end of the calendar year 2025, we are doing a bit of that rewind tonight. We are doing some stock taking, as it were, because 2025 has not been just another year of policy tweaks. It's been pitched as a year of reform, which are deep, which are wide, and they're across the economy. So from labor laws to tax codes, from markets to MSMEs, from the ease of doing business to global trade, the reform moves have come rather thick and fast. So the question that we're asking tonight is a simple but consequential one here on The Big Question on NDTV Profit. These reforms that we're talking about, are they giving India the real impetus, the leg up that India needs to move decisively towards that goal, the goal of becoming a developed economy, a Viksit Bharat by the year 2047? So if you clock back this year, we've seen some sweeping domestic reforms. With labor laws, we're overhauling formalized hiring. We are widening social security. We are trying to simplify compliance as well. On the taxation front, we're doing a decisive reset. There is a new Income Tax Act, zero tax up to 12 lakh rupees, and a simpler two-slab GST structure. So that reform, an important one, it's aimed at boosting consumption and at the same time strengthening compliance as well. What about the capital markets? That's where we're getting streamlined through regulatory reforms to deepen the markets at one level and also protect investor interest. And what about the smaller businesses, the MSMEs? They're getting free to scale without fear through the higher thresholds for one, through deregulation at another level. And there is the decriminalization under the Jan Vishwas that is shifting governance from fear to more of facilitation. So alongside all the domestic moves, India is also pushing harder on global integration. Look at insurance. That sector is opening up to 100% foreign investment. What about the trade ties? They're expanding through the new FTAs with the United Kingdom, with Oman, with New Zealand, Europe as well. And of course, there is the one with the US that still remains elusive. And then in the last parliament session, we got legislation moving on opening up the nuclear sector to private participation through that Shanti bill, something we've discussed on The Big Question. Also, rural employment is getting reworked with the G Ramji bill, which is linking wages with infrastructure, with livelihoods, with long-term growth. And it's replacing the decade-old Manrega. So when you look at the overall picture, supporters are saying that all of these reforms amount to structural change, that the foundation for the next 2 decades of growth are being formed through these reforms. That's what the supporters are saying. What about the skeptics? Now, they're arguing that reforms matter only if they deliver jobs, only if we get investment, and only if we see actual productivity on the ground. Which is why tonight on The Big Question, we are stepping back from the headlines and we're asking, do these reforms of 2025, and we've seen plentiful, do they add up to a genuine turning point? Can they realistically power India's journey to Viksit Bharat 2047? Or is execution going to be that all-important missing link? So good evening. Welcome to NDTV Profit. I'm Vikram Oza. This is The Big Question, and let me introduce you to our panelists who are joining us on the show tonight. One of them is Gaura Sen Gupta, Chief Economist at IDFC First Bank. Along with her, we have Deven Choksi joining us, Managing Director at DR Choksi Investment Managers. Also with us, Rajneesh Goenka. Rajneesh Goenka is Founder Chairman of MSME Development Forum. Great to have you, sir. And Rishi Agarwal, CEO and co-founder of Team Lease RegTech. Welcome all, and may I ask all of you to keep your answers a little brief because we have so much ground to cover, so many reforms. But Gaura, let me ask you, with the kind of reforms that I'm talking about, now we are seeing India at an 8.2% growth rate. We are seeing it as the 4th largest economy in the world. How much of that do we owe to the kind of reforms that are coming through?
Definitely the GST cuts that were effective from September 22nd. We're yet to get the Q3 GDP, but if you look at the high frequency, the GST cuts have been quite effective in terms of providing a much needed boost to the urban side. Rural, there I think it's more thanks to the weather conditions, the fact that we've had 2 consecutive years of good monsoons that has reflected in terms of rural. In terms of policy support to growth, I would say even CAPEX, this particular, at least from the center, there has been continuous focus on prioritizing capital expenditure. Even state governments, at least in the first half of the year, we did see some pickup in capital expenditure, which is important in crowding in the private sector, which for now, at this moment, still remains a little bit muted in terms of capital investments. But in the interim, it's been the center and state governments which have really supported the capex cycle currently.
Devin Choksi, what's your understanding of market participation on the retail side? Do you see the kind of tax benefits that are going across thanks to the last budget, or the two-slab GST structure, the reform push over there, actually moving participation on the retail side in the equity markets? Is there a real palpable shift there?
Yes, of course. I think I haven't seen, in last 4 decades of my journey at capital market, I think this kind of profound reforms which have come up. Practically for a family of 4, I think 50 lakh worth of income is tax-free. I think this is never heard of in this country before. So certainly that money has a power. I think 30% of that money goes towards savings and investment as a percentage of GDP. Now, if you consider that as a norm, then in such situation, I think the amount of money that you are getting into the market system is going to be quite large. And no wonder, I think we have got 1/3 of the IPOs subscribed by the retail today in the entire country. So out of 1,75,000 crore worth of fundraise, about 1/3 of that has come only from retail, and the rest have come from the institutional players. Similarly, I think with the amount of money which is left in the hands of the individuals by way of two GST rates, and I think significantly cutting down almost all items into that, I believe that I think the kind of a game is played. Consumption is seeing the uptick, and we have seen in the third quarter the kind of value proposition which is coming up. Maybe I think this is beginning as I see it. I think this is going to go much larger way. We are going to see a good amount of traction in the consumption demand in the country. So one remains relatively more optimistic about the prospects going forward, both from the investing side of the activity as well as consumption side of the business for the corporates. I think this is going to be the phenomenal time going forward.
A phenomenal time going forward. Rishi Agarwal, how much of the labor reforms are likely to help? In terms of implementation, that remains to be seen. But at the moment that we are at, looking at the kind of reforms and that push coming through on the labor economy, how much of that is going to help us grow towards a Viksit Bharat 2047, you think?
Oh, significantly, Vikram. If you see how things have been, land, labor, capital, and entrepreneurship are the 4 factors of production. Last 10, 15 years, we've seen the capital and entrepreneurship both unleashed in the country. Anybody who wanted to become an entrepreneur can become an entrepreneur, thankfully now. We've seen tens of thousands of them become entrepreneurs in the last decade or so. Anybody who wanted money for their enterprise can easily get money thanks to deepening capital markets, vibrant PE and VC ecosystem. What we've seen this year is unleashing labor as the third factor of production. 78 years ago, when we became independent, we wrote some laws that they may have been relevant back in the day, and they've lost their relevance over the last 78 years. I mean, what we need in 21st century is very different from what we needed in the 20th century. We've unleashed labor as a factor of production this year, and this is going to show up in significantly higher output, job creation, investments, and GDP translation in the next 20-25 years.
How much of that kind of growth, Rajneesh Goenka, is going to actually come from MSMEs? When you're talking about the smaller businesses, when you talk about compliances, that burden, is it really coming down for MSMEs? And in terms of even talking about the labor reforms, for hiring, for being able to kind of get the ease of doing business, hiring talent, finding them, how much of that is actually happening on the ground?
Actually, for MSMEs, labor hiring was a big problem. And the regulations, labor laws were a very big hurdle in relations of employer and employee in MSME sector. I believe that after these genuine efforts for labor reforms and the codes which have been released by the government this year, that's going to at least give a mental relief to the MSMEs that they are not going to be penalized for small things. decriminalization, and so many other factors, ease of doing business, that has given a big relief to MSMEs. And as you know, if we have to compete China, we have to grow our MSMEs in the country and give them liberty to work, because sometimes MSMEs feel that we are constrained by so many regulations, laws, which they are not able to comply with because of their low resources, and they cannot hire big consultants. So this ease of doing business and trying to reduce compliances burdens on MSMEs is certainly going to help the production and going to help larger job creation from MSME sector, because
Yeah.
MSME is the largest employment provider and creator in India.
Correct.
So these, right?
No, absolutely. So, Gaurav, when Sir's talking about the possibilities of job creation right now, where exactly do you stand when you talk about our ability to compete with the best in the world? Yes, on the taxation front, zero tax up to 12 lakh, a new income tax act, all of that is meaningful for consumption, for household confidence, and it is very crucial going ahead. But is this going to be a domestic consumption story of growth for Viksit Bharat 2047 to happen, or will we have to be more competitive globally to be able to get there?
Definitely, the GST cut is more a near-term boost that will help us in FY26, FY27. For longer term, it will require much more structural reforms. For that, the labor law reform, that really does help from a long-term perspective, because the simplification of labor laws into 4 codes mean it basically incentivizes companies to scale up. So there's to scale up by reducing the ease of compliance burden, by codifying the labor laws. It's given more flexibility to companies as well as more protection to employees. And the protection is not limited to just the formal sector. Even when you're part of the informal sector, then the laws also cover you. So from that perspective, I think the labor laws are actually the key for if you have to look from a more longer term perspective. The GST cut is coming as a more near term boost to consumption, the impact of which is being felt in Q3, Q4, as well as into next year. But the importance of the GST cut comes at a time where we've got a lot of uncertainty on the exports front. Globally also, if let's say we get the trade deal with the US, we do expect global growth to be on a weaker note. So from the exports perspective, even after we get a trade deal with the US, it will be a definite positive, but overall export growth will remain moderate. So it has to be domestic demand focused growth, which needs to support India's growth going forward, at least in the near term, until we see some pickup in global growth dynamics, which for now, at least in the near term, if we go into FY27, doesn't seem likely. And the importance of giving a consumption boost in this sort of volatile external environment is because the only reason why private capex is being held up is because there is uncertainty on domestic demand and there is uncertainty on exports. So the GST cut, the income tax cut, tries to take away the uncertainty on the domestic demand front. So once companies see that there is a viable pickup in consumption, both urban as well as rural. Rural began to pick up from Q2, urban is showing good signs in Q3. And if it sustains, that will crowd in private capex, which for now has stayed at the sidelines. So conditions for private capex have been favorable for a while now. You've had cleaner bank balance sheets, very healthy corporate balance sheets, very high level of capacity utilization in the manufacturing sector. So the only missing piece was clarity on demand outlook, which the sort of GST cut, income tax cut is trying to aim to provide some demand boost in this sort of volatile global demand environment, which is important to crowd in private capex.
So this private capex, Devin Choksi, how much of an overhang is the fact that we haven't been able to crack a free trade agreement with the US? Yes, a lot of other FTAs are getting signed, but in terms of that foreign investment and the confidence that they have in the Indian markets in terms of the ease of doing business, in terms of the regulations remaining uniform and steady over a longer period of time, how much of that environment is India being able to create, and how is that getting reflected in the confidence that investors have in the Indian markets, both foreign and domestic?
So yeah, it's a good point actually. I was just thinking while you were asking question, I think which companies have actually, I think, collected more amount of money by way of OFS. Now, if you look at, I think, the likes of Hyundai, likes of LG, both South Korean, of course, and similarly, some more other companies, I think, who have collected the kind of money from the market through the IPOs. Majority of the funds have gone by way of OFS, I think, as far as I think this particular process is concerned. This is only an indication that I think those promoters who have invested in India, they have reaped the benefit. Had it not been this particular benefit, I think they would not have probably seen the success out of it. So frankly, over a period of time, I think the country as a whole, we have eased, I think, most of the regulations. In my viewpoint, I think today capital raising regulation, I think, has been eased out. Even the SEBI has created a variety of committees, I think, through for giving the empowerment to the faster implementation of some of the reforms, including the algo trading, among others. And at the same time, I think decriminalizing some of the compliance laws has also possibly gone much in favor of this particular argument that the country as a whole, we are moving in the direction of creating ease of doing business. Yes, I think there are many other things which are required to be done, particularly in the area of the judiciary system, where the decision-making process is quite cumbersome, costly, and time-consuming, unpredictable. Though the new laws have come, but I think still it is far from what we are expecting it to achieve. But overall, yes, I think we are moving in the right direction as I see.
Yes.
And the validation is coming in form of, I think, the money which is being raised by the promoters through OFS.
So Rishi Agarwal, just taking away from the point that Devin Choksi is making, judicial reforms, is that the big push that, companies are going to need for a quick resolution? In terms of bankruptcy, etc., we've been able to cover ground. Which are the areas that do you think that is going to help in further enticing private sector, the kind of push that is required for this entire Make in India campaign that we've run? How much further does it need to get pushed through judicial reforms, you think?
Well, judicial reforms, I think, is a key area of focus. Our judicial system is clogged with millions of court cases. They drag on for an extended period of time. There's less predictability. Commercial court infrastructure is very poor. A lot of cases in the courts come from the commercial cases. We really need much better focus on alternate dispute resolution. We need better equipped commercial courts, time-bound tribunal system which can work. So all of those areas are key. But I do want to talk about labor laws here, Vikram, because labor is very, very critical. I spoke about this being one of the 4 factors of production. We saw a path-breaking, groundbreaking reform that unleashed this year. Just for your audience to know, there were 14 different definitions of a worker, 12 different definitions of wage, and 10 different definitions of establishment, which have now been condensed into a unified definition. There were 1,436 different rules embedded in 29 Central Labor Acts, which have now been condensed into about 351 items. The highest amount of criminality, and we heard Devin talk about it, was embedded in labor laws. Gautam Chikkarmane and I co-authored a book titled Jailed for Doing Business about 3 years ago, which became the basis for Jan Vishwas 1. We served on that committee as well. We saw the needle move a little bit. Jan Vishwas 2 has recently been tabled in the parliament, which is great news. 17,000 out of 26,000 clauses for imprisonment have come from the labor laws. 8,000 out of them came from the Factories Act of 1948. Now imagine we are trying to run a factory in the 21st century with laws that were written in 1948. So I think that is the key where we have moved the needle on the subject. The definitions have been harmonized. The thresholds have been simplified. The number of compliances have come down. Just so you know, there were 181 different forms and 84 different formats of registers under the legacy labor laws.
Yes.
That has been condensed into about 73 and 8 in the new labor codes. So all of those are areas where we are unleashing the entrepreneurship. We are removing these artificial thresholds that were which kept our enterprises small and informal. 63 million enterprises in India only translated into 1 million formal enterprises. And out of that, only 500,000 actively contribute to social security. Now that equation where we kept an unusually large number of companies dwarf in the country, where the growth tax was so steep that companies wanted to stay small and informal, that has been taken away with this change. And
what about women in the workforce, Rishi Agarwal?
Oh, absolutely. Significant changes you're likely to see women drop off at the time of maternity. Maternity Benefit Act came in. Creche rules were brought in to stem that change. A lot of changes have.
But do you think more women are going to be in the workforce? Because that's going to be a key driver to arrive at a Viksit Bharat 2047. You agree with that?
Yes, because the nighttime working hours have been relaxed in a number of industries which were artificially capped in the past. Women could not work in the overnight shifts. Many industries could not employ women workers in late night shifts, obviously subject to safety and security considerations. A number of those reforms have been unleashed in the current
And
law.
like you also mentioned, Rajneesh Goenka, perhaps you can come in on this, because those thresholds for MSMEs, they've been raised rather significantly. So do you think, like Mr. Agarwal is pointing out, does it finally remove the fear of scaling up and losing benefits now?
Actually, this new definition is certainly going to help MSMEs to reach out to the global cheaper funding.
Right.
Because earlier, the international funders were not interested to join for 200 crores, 100 crores. After this has been increased to 500 crores, we have seen an interest of global financiers at a cheaper rate to India, which will finally make Indian MSMEs competitive globally. Because of these constraints, we were not competitive, and we were not able to give world-class qualities and hire consultants and all these things. With this threshold increase, it is certainly going to improve the manufacturing and the position of. I can just cite one example, and that in this Chandrayaan, why America and Russia and these France and Germany, they are putting their satellites in our Chandrayaan.
Yes.
Because the cost is cheaper because of MSMEs components. So these things will certainly add up to the growth of MSMEs and growth of manufacturing.
Right.
And job creation and a lot of spending money in the hands of middle class.
Yes, but this entire thing about cost competitiveness, Gaura, how crucial is that for India's growth story right now? Because yes, that's at one level, China has kind of taken that first mover advantage, if you please, and India is following suit on that front, but it needs a lot more at this stage, now that we are in the year 2025 and 2047 is our target here. How soon do you see all of this not getting pegged around cost effectiveness, but going beyond that, being more competitive? We are opening up insurance to 100% FDI. We have logistics reforms going on as well. How does it place us in the global order?
Actually,
yeah,
okay.
Gaura, yes, please go ahead.
So that's where the labor laws come in. The fact that they are trying to make the compliance burden easier, incentivize firms to level up. So earlier, majority of Indian firms have 90% have, let's say, up to 5 to 10 employees. Majority of Indian firms are very small size. If you look at China, majority, 90% plus of their firms have much larger sizes. So that whole scale of production, which gives you efficiencies, that is what China is able to unlock in the manufacturing sector. Now, with the simplification of labor laws, more flexibility given to the employers, it will help companies level up. More of them will want to enter the formal sector. Apart from the labor laws, also the GST is playing a very key role in making sure that the entire production chain becomes a part of the formal sector, because GST gives you that tax benefit,
Correct.
which you can only take part in if your whole production chain is part of the formal sector. So both GST as well as the labor laws will help formalization, and the labor laws in particular will incentivize firms to expand their scale of production. But there are limitations. For example, China is now going to this next level of mechanization, where you have fully mechanized factories, dark factory outlets, okay,
Yes.
where there are no labor. It's purely mechanized. It's very difficult to compete there. I think India should also focus on their strength. Growing manufacturing, definitely, but we have a natural strength in services.
That's true.
Skilling is the next step. So we have got labor. The other part is land, which is yet to be addressed. Ease of acquiring land, which is the next step to be addressed by the government, both center and states. Then there's this third piece, which is skilling, making sure that our population, the demographic dividend which we get for the next 10 years, because the median age continues to reduce, the working age population in India continues to rise, which will be the only country globally that will see that sort of demographic transition. But to unlock that dividend, we need to create jobs and also ensure that our population is employable. For that,
Right.
skilling is very important. And with the way technology is changing, that will make skilling even more relevant, especially in modern services.
Very true. So if there's one thing that is a clear takeaway tonight, it is this, that 2025 is laying down the building blocks from tax and labor to markets, even trade. This reform push seems to be broad. It is ambitious. It's also structural. But as our panel is making quite clear, reforms only matter as much as their execution on the ground, in the boardrooms, in investor confidence. We've got to see it happen across the board. But whether this reform wave truly delivers Viksit Bharat by 2047 is going to depend not just on intent, it's going to depend on consistency, it's going to depend on follow-through, on the outcomes that we have over the next 2 decades. Let me thank my panelists for joining us with their perspective. Gaura Sen Gupta, Deven Choksi, Mr. Rajneesh Goenka and Rishi Agarwal, thank you so much for joining us with your time and your perspectives on this edition of The Big Question. And that's it from us on the show tonight. But of course, there will be plenty more as we wind up the year. But for the moment, from all of us here, good evening.